This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
Welcome back to Trade Flow TV. You know the drill. Markets move fast, and if you're not ahead, you're under. It is Thursday, July 30th, 2026. Yesterday, the market was tested by dual shocks: geopolitical fire in the Middle East and central bank policy in Washington. The illusion of a quick fix has completely vanished. The global supply chain is bracing for a brutal second half of the year. With oil pushing past critical resistance and the U.S. agricultural heartland baking, let's get you caught up for the Thursday open. First up, the 60-second commodities flash. Brent breaks $90 after Hormuz blast. The maritime risk premium has solidified. Following the weekend explosion of a tanker in the Strait of Hormuz, Brent crude has violently pushed past $90.15 a barrel. Insurers are aggressively hiking premiums for any vessel attempting to navigate the contested Iranian shipping corridors, restricting energy flow. Meanwhile, the Fed stands pat. The Federal Reserve held the federal funds rate steady at 3.50 to 3.75%. The decision underscores a trapped central bank. They cannot cut rates while $90 oil threatens inflation, and they cannot hike without crushing the economy. Silver bases around 60. Spot silver is trading near the $59.80 level, demonstrating immense relative strength. Physical demand from the enterprise sector, specifically AI server cooling and grid-scale solar, continues to drain supplies at an unprecedented rate. Finally, the heat dome decimates U.S. crops. The unrelenting heat dome parked over the Great Plains is driving temperatures 15 to 25 degrees above normal. Wheat and corn futures are gapping higher as the market scrambles to price in catastrophic yield destruction across the American breadbasket. Let us take a deep dive into why the Strait of Hormuz tanker explosion guarantees a long-term inflationary floor in energy. The data confirms that physical reality has overtaken financial engineering. You cannot paper over a burning tanker or a withered crop. The tanker explosion was not an isolated incident. It was the establishment of a new global energy tax by enforcing lethal nav corridors. Brent crossing 90 is just the beginning. The global market is now forced to pay a massive risk premium through insurance or rerouting costs. This logistical friction means that even if demand softens, the baseline cost of oil will remain structurally elevated, feeding global inflation. This highlights the Fed's ultimate paralysis. The central bank is caught in a stagflationary trap where they cannot fix supply-side shocks. High interest rates will not clear naval mines from the Strait of Hormuz, nor will they generate rain over the U.S. Midwest. Physical commodities are in control. The situation in the U.S. agricultural belt has escalated to an extinction-level event for this year's harvest, far beyond a weather anomaly. With temperatures in the triple digits, the lack of soil moisture is causing irreversible damage to wheat and corn yields during their most vulnerable phase. This is compounded by the astronomical cost of fertilizer driven by high oil prices. The global shortage is being met with localized devastation. Because the world relied on the U.S. harvest, this guarantees a massive, sticky spike in global food inflation heading into the fourth quarter. Here is the trade flow take. We are fully entrenched in the era of the physical deficit. The Fed is trapped and supply chains are breaking. Do not try to short the momentum in energy. The logistical nightmares in the Middle East have cemented a high floor for Brent crude. Maintain long positions in primary silver and copper miners, and deploy capital into domestic agricultural equities that secured supply early. Head over to TradeFlow TV so your terminal remains synchronized. Stay liquid, stay sharp. Have a defensive Thursday, and we will see you tomorrow.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.